Welcome to your Mortgage Insider update for the week of June 17th. My name is Brian Cushing with Mortgage Insiders at AFN, bringing you a quick update on what's happening in the interest rate market. It was a little bit of a rocky ride, but much improved after this last week's CPI and Fed meeting. Let's check out the charts. This week starts off the 10-year Treasury up 8 basis points, but noticeably lower than over the last few weeks at 4.29 rounded up percent here. Mortgage-backed securities, the trade on the prices on mortgage-backed securities will be going down as interest rates are higher. So we can see interest rates on the 10-year up slightly. So we see the 10-year chart. So this is vastly improved just over the last couple months, 45 days since the beginning of May. Considerably higher interest rate on the 10-year Treasury that had its moments where it was coming down. We had the scare where things bounced back up. And this was the roller coaster ride over the last couple weeks, specifically after the jobs report that did bounce interest rates back up, but then to turn that around and have the CPI report and the Fed meeting considerably lower, bringing interest rates back on the 30-year fix down just below 7% again. When we see the 30-year mortgage-backed security, the price, the 20 basis points lower, that's relatively speaking not much worse than we were just a couple days ago. Mortgage-backed security prices were lower, and as they improved, the green was good. We saw interest rates improve, while the prices to the investor got back to a high that we had last hit back on May 16th, and then again, a level that we hadn't seen in the mortgage-backed security market since April, early April. So much improved on mortgage-backed security prices. So as we get started this week with improved mortgage rates, next items of interest are going to be the retail sales numbers coming for this last month. So retail sales were weaker when we received May data. So the issue for June, we get here middle of June, is actually for May. Last month we received the April retail sales in May, and that was much weaker than expected. So another weaker number in retail sales would give light to consumer under stress if they're not purchasing as much at retail front, especially during the time of year where people are out at the mall, going to the movies, summer break. So we'll see how that plays out. We'll also be getting later in the month GDP. The gross domestic product also missed on the low side for the first quarter. As we finish June, we're going to end the second quarter where GDP will become the next staple for what's the health in the economy. With that, have a great week from the Mortgage Insiders. Take care.